Well, thanks for joining us. I'm Marlon Bowling to kick off our day trade here on Thursday. I'm joined by Brian Hoops of Midwest Market Solutions in Springfield, Missouri. Brian, let's take a look at how we're opening up in the grain markets today. We'll start on the corn. And keep in mind, we did have export sales numbers before the open today. On the corn market in Chicago right now, we are trading 1 penny higher. It was 1.5 pennies higher till just a second ago. Right now we're up a penny at 3.88. And we have the May contract a penny higher at 3.94.5. So not doing a whole lot here, but it is a touch firmer. Now on the soybean trade, we had some strong soybean export sales again, and yet we have soybeans trading lower. This is interesting. January down 3 at 925.5, and the March down 2 1/4 at 938 1/4. And then we get to the wheat, and remember, we had a day of selling yesterday in the wheat. Well, today they're back at the buy side. We have the March contract 3 1/4 higher at 551.5. New crop July now 2 1/2 higher at 556. And in Kansas City, we've got that nearby March contract currently 3 3/4 higher. It's now at 466. And we have that new crop July 4 higher at 481.5. That's well off its earlier low already by about 5.5 cents. On the Minneapolis wheat, we have the March now 4 1/2 higher at 543 per bushel. Now, Brian, we looked at the export sales numbers that came in this morning, and I don't know if that offered all that much direction where we see a lower soybean trade, but on the export sales, we had corn way over 2 million tons this past week, 2 1/4 million to be exact. Soybeans 1.47 million, very strong numbers, but it seems like well, in fact, you can add on top of that, we had an overnight sale of soybeans, another 126,000 tons. And yet, it seems like the expectations are so high on soybean sales that even that was a disappointment to the trade.
Yeah, and some of this has already been traded. There's been rumors for about 2 or 3 days now that China has bought 5 to 7 cargoes of U.S. soybeans, and we're seeing finally some confirmation. This is about 2 cargoes worth. So on Friday morning, we may get another private export sale announcement that they sold more beans to China. But again, this has been traded and factored into market pricing already. And that's kind of what's happening with those corn sales. These were a marking year high for corn and certainly an outstanding number, 88.4 million bushels. But again, this was a host of private export sale announcements that were reported last week. It was part of the USMCA agreement. And it's not a surprise to the trade, so you're not getting a major reaction out of it. It's the wheat market where we're a little bit of surprise here. This 31.9 million bushels of wheat, also marking your high for wheat, but it comes without any private sale announcements yesterday, so it's kind of catching the market off guard, and that's why we're seeing bigger gains in the wheat market. Corn is kind of following the wheat, and right now soybeans are absorbing this news because it's not fresh, new news, and it's looking ahead to the weather forecast for South America for the weekend, which look pretty beneficial.
It seems like when you talk about the wheat in general, globally, it's like things are just not ideal, if you know what I mean. I mean, it seems like a lot of countries around the world are reporting some kind of concerns about their growing season. It doesn't matter if you're talking about Australia or Argentina, maybe parts of Europe. It's just not a perfect year so far. Is that what's putting the premium in here?
Yeah, I mean, we're putting a little premium in because the funds are buying back a lot of their shorts. There is some concerns about some of the countries on a world basis that's having production issues. But then you look at Russia, they're expected to increase production over last year. They're expected to export more crop than what they had in the prior years, and we're seeing a lot of export markets, a lot of countries. Ukrainian wheat exports, for example, are about 14.3 million metric tons this year. That's well above what they did last year, and that's undercut wheat prices and limited how much wheat we're able to sell. But we're getting into a time frame now where we're starting to see a renewed surgence for corn and wheat demand, and part of that is because Ukraine and corn exports and wheat exports have both maybe been a little bit exhausted for this time of the year.
Isn't it true that the dollar had kind of weakened up a little bit this week, and maybe that would be a little bit supportive also to some export activity?
Absolutely. The dollar looks like it kind of peaked out right about the end of November. They had a bearish reversal type day, outside day lower. And since that time, the market has fallen about to 2 full points. And so when you have a drop like that in the U.S. dollar, that will make our exports more competitive on a worldwide basis. And we've seen a resurgence in corn and wheat since that time.
Okay, well, what we're going to do, Brian, is take a break right here for a word from our sponsors, and then we'll come back and we'll analyze what's going on the open in our livestock trade and talk a little more about that cattle on feed report coming up. Plus, don't forget, we have a couple more livestock reports after the weekend, and we'll talk about all of it when we come back after this. Well, we're talking with Brian Hoops of Midwest Market Solutions, and I want to shift our focus over to the livestock open this morning. We'll start with the live cattle board and see how we're doing. On the corn market, remember, we were a little bit firmer here this morning. Live cattle are about as quiet as can be with the holiday season, quiet as a mouse. December now up 3 cents at 122.28. We have February up 3 cents at 126.15. On the feeder cattle market, let's switch over there. We have the January up 32 at 144.88. And March is up just 7 cents at 144.93. Make it only 3 cents higher now. April, 3 lower. So very, very quiet. Now looking at the lean hog trade. So far this morning, we have the February down a nickel at 69.85, still under 70 bucks. We have April down 35 at 76.88. Now they're off their earlier highs. In the case of April, down off their high by about 60 cents already. Brian, on the early trading here, does that tell you anything about what the market may or may not do here this morning, or is it just too early?
Well, yeah, it certainly tells us the volume is extremely light and very slow. We saw that yesterday in the trade, very limited activity. We're seeing it again. There may be some activity around the cattle on feed report on Friday afternoon. And if we get some cash trades to develop during the trading session, we may see some market moving based off of that. But other than that, it looks like a lot of participants are packing it in and not wanting anything to do with this market. They're kind of just shutting things off for the holidays. But there is a cold storage out on Monday as well, and that could, I think, attract a little bit of attention, but it's going to be very limited, I'm afraid, and the volumes are just going to get slower and slower as we get deeper into the holiday season.
Interesting stuff. All right. Well, I thank you for the comments as we get things rolling here on a Thursday. Thanks for the help, Brian. Brian Hoops of Midwest Market Solutions. He is based in Springfield, Missouri. I want to run through the latest feeder cattle information for you with data provided by Ed Serwin of CZ Cattle Market Analytics. He's based in Amarillo, Texas. And as we took a look at the numbers from last week, Ed said it was the last good fall run for the year. He said prices firmed up with active bidding, particularly on the yearlings, when the feedlots were filling pens before the end of the year. So on the prices, on the steers, 5 to 6 weights, we're bringing 139 to 180. And it's very similar to what we had the week before. 7 to 750 pounders, we're bringing 142 to 154. That was about steady to $1 higher. 8 to 850s, we're bringing 141 to 152. So that would generally be anywhere from about $1 to $4 higher. Total receipts, 34,600, quite a bit lighter than the previous week's 47,800. On the heifers, the 5 to 6 weights, we're bringing 118 to 150. That was a little bit, basically about steady, I guess, with what we had the week before. The top end, $1 less. 7 to 8 weights were 131 to 145. The upper end of that trading range would have been about $3 higher than the previous week. The receipts, again, 34,600. So, Janet, that's a look at how we're opening up things here in the grain livestock trade so far. We'll see what happens next half hour.
See what Thursday has in store. Thanks, Marlon.